Financial crash will cause a global crisis. Do this now. With comparisons being made to both the global financial crisis of 2008 and the downturn brought on by the COVID-19 outbreak in 2020, it appears that the world economy is destined for a terrible recession that will impact billions of people around the globe. How will this affect you and your family? What happens to your savings? Let's find out. A great deal of hope that any significant setback may be avoided rests on a high level of policy fine-tuning, which may be challenging to deliver. In reality, the majority of current wagers predict a significant slowdown without any clear indication of how its impact might be mitigated. Keep watching to find out what this means for you and your family. U.S. economic growth is projected to decline even more the next year to just 1% from 5.7% last year's level of 1.6%. Without a doubt, Europe and Germany in particular are in the worst shape. Germany's GDP is expected to drop by 0.3% next year from its current 1.5%, which is itself down from last year's 2.6%. In contrast, India's growth rate would drop from 8.7% last year to 6.8% in 2022, according to IMF's most recent World Economic Outlook, and is expected to further decline to 6.1% the following year. The fact that their slowdown won't be as severe as that of the developed world may be the single saving grace for a nation like India and developing nations in general. With all of this combined, the world economy will only grow by 3.2% this year, down from last year's 6% growth, and on track to reach a pitiful 2.7% in the next year. As a result, several pundits have stated that a recession is inevitable. This bleak situation has been created as a result of a number of things. The U.S. Federal Reserve's aggressive monetary tightening since March to reduce inflation, which is currently at 8.2%, is the main contributing factor at the moment. Global capital has flooded to the U.S. to invest in its government assets as a result of the Fed raising interest rates, making the currency stronger than it has been in 2 decades. The central banks of the world have unavoidably had to raise interest rates to stop the flight of the dollar and the drop in their exchange rates. While the Fed is pursuing this policy, this has resulted in more expensive currency and increased import prices for necessities around the globe. The fact that this global financial tightening follows the outbreak of the Ukraine war early in the year only serves to make matters worse. The pandemic was waning at a time, raising optimism for a global recovery. The ability of authorities to properly calibrate monetary policies such that there is neither an over-tightening nor an under-tightening of monetary conditions will determine the international economy's immediate future. As has already begun to happen in Sri Lanka and Pakistan, the former will result in a protracted recession as well as debt and payment issues in developing nations. The latter will result in an inability to control inflation. But that's not all. Fiscal policy cannot be trusted to continue on its own while all eyes are focused on monetary policy. It must not raise liquidity, which can happen as a result of efforts to reduce taxes to lessen the financial burden of expensive necessities on consumers. Additionally, governments in less developed nations must take action to lessen the burden on the average person in the face of rising prices. The only way to achieve this without unduly relaxing the purse reins is to focus financial assistance on the most needy people. In order for smaller firms to stay in operation, this must be done in conjunction with providing loans at rates that are lower than the high market rates now in place. Similar pain would result from such enterprises ceasing operations because money has become unaffordable as it did during the lockdown's early phases. Jeff Bezos, the founder of Amazon, has urged people to refrain from wasteful spending and hang onto the money during current economic difficulties and has warned of an impending worldwide crisis. His remarks come at a time when major technology companies are laying off workers all around the world and central banks are raising interest rates to fight inflation. Take some risk off the table, the founder of Amazon urged in a Sunday interview. Stock up on some dry powder. In the event that we have even more severe economic troubles, even a modest amount of risk reduction could make a significant impact for that small organization. You must slightly manipulate the probabilities. If you're thinking about getting a big screen TV, you might want to hold off, save your cash and see what happens. The same is true for new cars, refrigerators, and other appliances. Simply take some risk out of the equation, he continued. Bezos has already expressed concerns about a recession. The founder of Amazon stated last week that a number of sectors are experiencing layoffs as a result of the economy's poor outlook. The current state of the economy is not promising. As the economy slows, you can see layoffs happening across the board. If a recession isn't already underway, it is likely to start soon, according to the probabilities, he said. The world's largest online retailer disclosed layoffs across its gadgets and books divisions. In order to handle its dire finances, the corporation reportedly plans to eliminate up to 10,000 positions or 3% of its corporate personnel. The corporation claims that these layoffs are the largest in its corporate history. Leaders across the company are working with their teams and looking at their workforce levels, investments they want to make in the future, and prioritizing what matters most to customers and the long-term health of our businesses, said Andy Jassy, the chief executive officer of Amazon, in a note to staff. We still don't know exactly how many of the roles will be affected, but each leader will let their teams know as soon as the specifics are worked out, he continued. The Seattle-based e-commerce company, whose staff increased by 50% over the first 2 years of the COVID-19 outbreak, has similarly made the decision to halt hiring. The International Monetary Fund (IMF) has warned that Russia's invasion of Europe continues to destabilize the global economy in its Countering the Cost of Living Crisis October 2022 report, adding that gas prices in Europe have increased fourfold since 2021 as a result of Russia cutting the supply to 20% below levels from 2021. As is well known, it has also caused a rise in food costs on the world market, which had a negative impact on households with limited incomes and developing countries. A website that tracks layoffs reports that 849 organizations worldwide had fired up to 136,989 workers so far this year. The social media platform Meta laid off 11,000 workers earlier this month, representing 13% of its staff. Twitter, a social networking platform that Elon Musk, the CEO of Tesla, recently acquired, laid off 50% of its staff. In its third round of layoffs in October, software giant Microsoft fired 1,000 workers, or 1% of its staff. To restructure its operations, Snap, the parent firm of the social media network Snapchat, let go of 20% of its workers. According to a recent survey, approximately 75% of prospective voters feel as though the U.S. economy is in a recession, even though it officially isn't. Even while wages are rising, inflation is still painful to deal with because of high prices for basic commodities like food and fuel. It hasn't been a fantastic year for stock investors either, which is particularly difficult for retirees who are living off their money. Similar statements regarding the economy have recently been made by other corporate leaders. Elon Musk, the CEO of Tesla, acknowledged last month that there is a kind of a recession going on in Europe and China, and remarked that demand for Tesla is harder to come by. Musk also expressed concern that Tesla might fall short of its goal for sales growth. At a time when there are significant social and political rifts in society, Bezos pledged to donate the majority of his $124 billion fortune to organizations working to combat climate change and support people fighting to bring humanity together. With this, we conclude our video. We appreciate you helping us to keep it going by watching. The best way to support our channel is to watch another episode. Thank you for tuning in. To ensure that you never miss an episode, please subscribe to our channel.